On behalf of the Federal Reserve of New York and Stony Brook University and its College of Business, its Alumni Association, and its Department of Economics, welcome to this Long Island virtual conversation with Dr. John Williams, President of the Federal Reserve Bank of New York. My name is David Colon, and I'm the moderator for today's event. As someone who's started and built companies, I'm eager to hear President Williams speak about how Long Island small businesses can navigate through this challenging time. As someone who's helped put together Suffolk County's new Suffolk Forward business recovery efforts, I'm looking forward to hearing President Williams' perspectives on how federal efforts will make a difference here on Long Island in the months ahead. For our invited Zoom participants wishing to pose a question to President Williams or a comment that he can read afterwards, you can do so by typing into the Q&A box on the toolbar at the bottom of your screen. We'll get to as many of your questions as we can later in the program. As we get started, I'd like to particularly thank our two county executives, Steve Bellone from Suffolk County and Laura Kern from Nassau County, for being with us here today. And I want to thank Nassau County Comptroller Jack Schneerman for being with us also. On this week of Memorial Day, I want to ask you to join me in taking a quiet moment to thank those who've served to protect our nation and its freedoms, and those who serve us still. Now I'd like to invite Dr. Manny London, the Dean of the Stony Brook University College of Business, to say a few words.
Thanks, David. Our faculty, students, and business leaders have been working together these past 3 months as part of the Suffolk Forward initiative to support Long Island businesses. They are offering technology support, workshops on shifting to new revenue streams, office hours with faculty experts, and virtual student internships. And I'd just like to say that for more information, any businesses would like more information about these and other resources, please see the Stony Brook College of Business website and click on COVID for Business at the top of the page. And now I'd like to turn this over to our interim president, Dr. Michael Bernstein, to say a few words about the university and to introduce Dr. Williams. Thank you.
Thank you, Manny, and good morning to everyone. I'd like to thank you all for your time and for the opportunity to share a few thoughts and a bit of information with you about Stony Brook University. I do want to preface my remarks just by expressing the hope that all of you are safe and well in the midst of the COVID-19 emergency and the very challenging circumstances with which we're all faced. Just want to take a couple of minutes to talk about what's happened at the university and what's happening at the university and how we're trying to manage this situation. Might be of interest, I think, to our viewers and listeners. Stony Brook University is, as I think you all know, the largest single-site employer on Long Island, and we take that responsibility very seriously, and it frames a lot of our decision-making in which we're now engaged regarding our response to the COVID-19 crisis. First, just a bit about the university in the midst of this challenge. We successfully completed the spring semester of 2020. Last week, we had a digital virtual degree conferral ceremony. We are very proud of our graduating students, and we're very, very pleased that we were able to bring them through to the completion of their studies on time. We also, during the term, immediately responded to the COVID-19 emergency. We provided quarantine facilities on our Southampton campus for about 100 returning study abroad students from all across the State University of New York system. In fact, the vast majority of those 100 students were not from Stony Brook. They were from our fellow campuses in the system. We successfully quarantined them for 14 days, and I'm very pleased to report that none of them came down ill. We established a very large COVID testing site on one of our largest parking lots on our campus. That site is still functioning. It also provides a triage site for individuals who have fallen ill, and we're trying to determine whether indeed they're suffering from COVID or should be so-called people under investigation for COVID, or if in fact they're suffering from other ailments. We also partnered with the U.S. Army Corps of Engineers and the Federal Emergency Management Agency in constructing a 1,000-bed field hospital. It's on the western side of our campus. At the moment, that facility has not needed to be used, for which we're all grateful, but we were able to respond to that need. And finally, we were able to partner with Battelle Corporation and construct a decontamination facility on site that is capable of decontaminating literally thousands of N95 masks overnight, something that was of crucial importance in the first stages of this emergency when we were worried about sufficiently protecting our healthcare providers. So a word about the operations of University Hospital, and then I will conclude with some comments about university planning. Stony Brook University Hospital and its affiliate hospitals stood up immediately their emergency command systems and responded dramatically to this crisis. At the height so far of this crisis, over 420 of our 600 odd beds in University Hospital were occupied by COVID patients. A bit over 100 of those patients at the height of the crisis were in intensive care settings, a vast proportion of them on mechanical ventilators. I'm very happy to say that as of today, we have a bit under 90 COVID patients in the hospital and only a few dozen in the intensive care city and requiring ventilation. And we were able to meet the needs of our healthcare providers with respect to personal protective equipment, masks, gloves, and so forth. Finally, with respect to planning, I'll conclude with this. We are now actively at the university trying to work toward a fall opening plan. We have task forces. It's a complicated array of issues. We're looking at how to deliver courses in safe settings and online, how to people our residence halls again in safe ways that account for social distancing protocols, deliver food service and other student services, how to plan for student activities and athletics if possible, how to plan for the return to work of most of our employees who have now been working remotely. And we're doing this through an array of task forces that are all reporting up through some senior executive teams. And we're trying to coordinate all of this decision-making, obviously with SUNY officials at Albany and with the governor's office of the state of New York. And with the governor's office, we partner with, of course, the county executive, Steve Bellone, here in Suffolk County, and with other elected officials. We're very grateful for their partnership in this regard. We are hopeful we will be able to have a relatively normal fall opening, and that we'll be able to execute our missions in education, research, and in community service as best as possible within the context of the ongoing COVID emergency. Very grateful for the opportunity to share this information and these thoughts with you. Look forward to the ongoing conversation. And it's my great privilege now to introduce and invite to the screen Dr. John Williams, the president of the Federal Reserve Bank of New York.
Well, thank you, and it's really terrific to be able to join you all today. This is part of our virtual tour of Long Island, and it's a great opportunity to hear your questions and have a good discussion. But first, before I start, I would like to congratulate all the graduates from the class of 2020. That's a great accomplishment under very difficult circumstances, and it's you should be very proud of what you've done and very excited about the journey forward. You know, I'll just give a couple opening remarks for the Federal Reserve Bank of New York. Our district covers the state of New York, northern New Jersey, Puerto Rico, U.S. Virgin Islands, and a little bit of Connecticut. So part of our responsibilities is really to understand what's happening throughout our district, not just in New York City, but throughout the district. And so to do that, we do regular trips, this time, of course, a virtual trip, throughout the different regions, learn what's happening in terms of economic development, in terms of other issues, talk to business leaders, community leaders, government officials, and reach out to universities and other education institutions to really get a full picture of what's happening throughout our district now and in the future. Clearly, with COVID-19, the challenges that communities throughout the district, throughout the country and the world are facing are really extraordinary and unprecedented. And this is an important time for us in the Federal Reserve, given our responsibilities to make sure that we're hearing from people across the region what's happening in their communities, what's going well, what are the challenges, and how that's changing. And that informs our own views about the economy, what's happening in terms of the region and the country, and obviously also informs views about what policy decisions that we can make to help support a strong and prosperous U.S. economy. In this particular time, things are obviously rapidly evolving, and this outreach that we do is really important so that we're hearing not only what's happening in the data and what happened last month, but really what's happening today and in the near future. Our focus at the Federal Reserve is really centered on our goals, which are maximum employment and price stability. Our economy was in a good place just early this year. I know that seems like a long time ago, but back in February of this year, unemployment was around 3.5%. The economy is growing, adding jobs. We're in the longest expansion, economic expansion in U.S. history. Obviously, the COVID outbreak and the necessary health efforts to contain the spread of the virus have caused the economy to decline rapidly. So our focus really is on two things. One is to limit the spillovers of what's happening in the economy during this very difficult period of the pandemic to the broader economy and limit the damage, the longer term damage that can come out of this to the economy. And secondly is to put the economy on a really sound footing for an economic recovery, a robust expansion of the economy, and getting back to full employment, getting back to the strong economy that we were seeing happening last year and early this year. And that's where all of our efforts are focused. We're working tirelessly at the New York Fed with our colleagues in the Federal Reserve System and with other agencies, including the US government, to make sure that financial markets are working, operating effectively, making sure that credit is flowing to households, businesses, state and local governments, nonprofits, really making sure that the credit flow, which is essential for a modern economy to work, is supporting the economy and again, economic recovery. Obviously, side by side with us is government taking actions in terms of fiscal policy and in terms of supporting the various programs for households and businesses and others. This is a huge undertaking. It's requiring all of us to do our very best to support the economy and get it back on its feet and get back to a strong economy. But that's what we're committed to doing here at the Fed, and that's what we'll continue to do in the future. So I think I'll stop there. I'm really looking forward to hearing, having the moderated discussion and hearing your questions. And so I think David's going to join me now, and we'll start that part of the program.
Great, thank you, President Williams, and welcome virtually to Long Island.
Great to be here virtually.
I want to remind our invited participants on Zoom that you can enter your questions and comments in the Q&A on the toolbar at the bottom of the screen. And we'll get to as many questions of yours as we can, but know that all comments and questions will be shared with President Williams after the event, even if we don't get to those. So any comments you have and feedback you have for him is very useful and relevant. In ordinary times, we'd be sitting in a big room together, but today we do what we can. So President Williams, let's start by discussing some areas of particular interest to Long Islanders. As you know, Long Island is beginning to reopen this week, which is an exciting step. What metrics will you be watching, and what metrics should we be watching over the next several months to tell whether our economic recovery here is on track?
Yeah, that's a very good question, because as we've spent yesterday and today and this virtual trip through Long Island, clearly the fact that it's reopening now and watching those developments is an area of focus, I think, for business community, government leaders, and it's an area of focus for us as our economists and analysts in the Fed. And so what we are able to do today is just remarkable compared to, I'm going to date myself here, but back when I was in college, where, your data came out months later, it was aggregated, it was hard to get to the granular kind of daily high frequency data that we have today. So today we're watching on a daily basis things like how much are people driving, how many airplanes, how many passengers are airplanes, hotels, what are, from social media, kind of those various indicators of people's mobility and going into small businesses. So we have an incredible sources of data with big data today to see what's happening, not only not only nationally, but we can see it locality by locality. And one of the things we're doing is watching as certain states relax their restrictions, how did economic behavior change, and how did consumer spending and things like that change. And then we're also looking at that internationally, because of course, China was ahead of us in terms of the pandemic. Europe was also about a month ahead of us in terms of the pandemic. And so we're watching carefully what's happening in regions there. And so what we're seeing in a nutshell is a couple of things. One is clearly where the restrictions have been relaxed, we've seen some increase in economic activity, especially in areas like construction, where workers can get right back to work and get going on that. So we're seeing some of that. On the consumer side, there seems to be still, I would say, the behavior is to kind of hold back so far. So we're not seeing the same kind of decline in economic activity that we saw when the restrictions were imposed. We're not seeing the mirror image of that on the way out.
Mm-hmm.
So people are being kind of gradual in going back to businesses. So that's something we're watching carefully.
Gotcha. And obviously for Long Island, which is one of the most hardest hit areas in the country by the COVID-19 pandemic, but also one of the largest concentrations of small businesses in the country. We have about 100,000 small businesses between Nassau and Suffolk counties. Many of those are in that kind of retail sector, restaurants, home contractors, tourism related. They've been severely impacted, obviously, by this, as we all have. But so in your view, what can the Federal Reserve do to help these small businesses?
Well, it's not a hypothetical. It's what the Federal Reserve is doing to help, and here we're doing things that we haven't really done, in the past, or at least in our lifetime. So, just very quickly, beyond our kind of traditional monetary policy and kind of financial market activities, we lowered interest rates to close to zero. We've taken very aggressive actions to make sure financial markets continue to operate. And so that we don't see a drying up of credit. So besides those, we've set up, or in the process of setting up, various facilities that basically provide lending to small, medium, and large employers in the country. We've set up a facility that's now up and running to fund state and local governments who've been really hard hit by the decline in revenue, tax revenue, and other revenues during the COVID crisis. And we continue to think creatively and work tirelessly to think about what other gaps and other areas that we can come up with facilities or programs that will make sure that credit is flowing to households, small, medium, and large businesses, and to other entities who've been so hard hit. So our Main Street program, which is one that we're getting very close to finalizing and going public with, is really focused on lending out of 4 years for small and medium-sized businesses across the country. I think it complements nicely the SBA PPP program, which provided loans that could be turned into grants. So we have basically federal programs to help small businesses. We're coming in with lending programs for small and medium-sized businesses, plus all the things we've done for the larger employers to make sure that credit is flowing there. So those are really where our activities have been focused and will continue to be focused. One thing that I'll say is, we're a central bank. We can lend, but we can't actually spend in the way that Congress can or governments can in terms of providing grants or providing income or transfers to households and businesses. So we are by law restricted to lending to solvent businesses and entities, and we're doing that as much as we can, as best as we can. Obviously, it requires fiscal policy as well to help in this situation.
So if a business isn't profitable, that's not kind of in the purview of the Federal Reserve, is that, or is there a way the Federal Reserve can still help them even if they're not a profitable business, if they have certain assets or that kind of thing?
Well, so profitable is a hard one, right? So the way we've been viewing this is we've been looking at companies and other entities about where they were before COVID hit. Mm-hmm. So if you think about it that way, you have a lot of businesses, you can think of restaurants, use your examples, they're good ones. Restaurants that were doing well, they were profitable, but now they're closed. So of course they're not profitable. So really, we're taking the view of before COVID, are these viable businesses and other entities, can they pay back the loans? And then that's how we're viewing it. The real goal is to bridge, if you will, all of us through this very difficult period. And then those businesses can rehire workers, reopen once it's feasible to do so, and get this economy back on track as soon as possible.
Makes sense. You mentioned the Main Street Lending Program before. Some of the critique around the PPP program, which obviously wasn't your guys' program, was that a lot of big businesses got in and kind of crowded out some of the smaller businesses, especially initially. So as you're thinking about putting together that Main Street Lending Program, how do you make sure that you're leading to bank loans for small businesses and not just, kind of more sophisticated companies that may have other access to other sources of capital?
Well, we definitely are viewing this as this, for smaller and medium sized businesses. The very smallest businesses are ones that are probably going to come under SBA or other programs. But it's really, we have significant support from the U.S. Treasury in terms of providing capital for this program. I think, in terms of scalability, we will be able to handle an enormous amount of loans, and I think provide support for a broad spectrum of employers who are, kind of just running into the challenge of COVID and trying to basically get through this period and get back going. I don't think we have, we're not really limited really in terms of how much we can lend, and we're ready to do whatever is needed in this space in this program.
Great. And when do you expect that program to launch? The streets?
My colleague in the Boston Fed is heading up that program, and so I don't want to front run him there, but I think recently he said you're looking to have that up and running in the next couple of weeks. These are complicated issues, as you know, as a business person. We have to go through a lot of preparation and thinking hard, a lot of outreach to businesses to understand what they need, to understand what will best help the economy. That work is mostly done, so now it's execution, operationalize that program. In New York, at the New York Fed, we've been doing that on I think 6 now facilities, a lot of work to get that done, and like I said, for us, most of those are either already running or about to be fully operational. So I feel very good about our ability to make sure the credit's available.
Great, thanks. You mentioned earlier that the Federal Reserve is using a new lending kind of facility to state and local governments through the municipal liquidity facility. And I would note it's actually thanks to Suffolk County Executive Steve Bellone and some of our other Long Island elected officials that large suburban counties around the country like Nassau and Suffolk are even able to participate in that program. But I wanted to ask you, if we have any preliminary data on that. Has any money started to go out? And what impact do you think this is going to have on the ability of our Long Island municipalities to obtain the municipal debt financing they need?
So, that program just opened up their virtual doors, and the way that state and local governments borrow is they basically, they come up with their plan and their proposal with advisors of things, and then they will bring that to the market. And the way we've set this program up is that for those entities, they can come and register with us if they have borrowing that they want to do, and we can either join with other investors in terms of making those loans, or they could be completely through us. And so those doors just opened. We're expecting to see a number of state and local governments and others come to us for that credit because it's available. That said, one of the benefits of these programs has already proven its value, and that is the fact that we're set up that facility along with some of the other facilities has done a very good job of calming markets, providing assurance to investors that there's this Federal Reserve backstop in this market. And what we've seen is interest rates or yields or the cost of borrowing for many or most state and local governments has come way down in the market from where it was back in March. So there's kind of a double benefit of this program, and that's true of some of our other programs, that we're there to provide the credit, but in fact the market is actually functioning better, and a lot of governments will actually go straight to the market, and we're seeing that happen already. Go to the market because funding is available for them.
Well, that's huge for the governments, but even, perhaps more importantly, even huge for our taxpayers by lower interest rates, obviously reducing the cost of debt, and lowering, keeping on the lid as best as possible on, budgetary pressures for those governments. So that is much appreciated here
David,
on Long Island and across the country.
Do you mind if I make a quick comment on that? I mean,
Sure.
Everyone's been hit really hard by the declines in revenues that we're experiencing. The challenge of state and local governments and entities like that is that they're mostly still operating. They're carrying out the essential services, whether it's police, fire, utilities, or other things that have to happen. So they're seeing the revenues drop, but they still have to spend the money, keep people working on that. And so I think this program in particular can really help make sure that state and local governments don't have to lay off workers and shut down at the time when we really need them to continue to employ people doing that essential work, and obviously give them some space to get through this period and going forward. So I think that's why this is particularly important.
That makes a lot of sense. I know that the Nassau County Controller, Jack Schneerman, just did a report on the impact in Nassau County of the sales tax impact under a variety of different scenarios about how fast we kind of come back as an economy. And it's kind of a daunting situation for our local governments that rely so heavily here in Nassau and Suffolk on sales tax, because when you have the economic activity dry up, all of a sudden you have that revenue dry up. And obviously we're all hoping for a quick rebound, but under the scenarios that were sketched out by the controller's office, there's it's pretty dire outlook, at least in the short term. And in that regard, I was wondering maybe, it's a lot of this sort of sales tax impact relates to what kinds of sectors of the economy come back, fastest, and which ones may be slower in coming back, or which ones, quite frankly, need to be reimagined altogether. So I wonder if you had thoughts on that, particularly as we look at the Long Island region and the New York metro region, about what industries you see being able to come back fastest from this situation, and which may need to be rethought going forward.
Well, the first thing I'll say is this is going to be driven by the virus itself. It really is going to be driven by the, how does what we're seeing in terms of new cases, in terms of the spread of the virus, and of course, hopefully that really slow down and be under control. So that's the driver of everything. So when we look at, as we've seen the first stages of reopening here in New York State, and specifically in Long Island, I do think certain parts of the economy can come back a little bit quicker. Manufacturing, which obviously plays a role here, construction as well can come back more quickly. It's easier to kind of manage that. Obviously, doing that in a safe and way that takes into account the health issues. So I think those are the areas we'll see come back quicker. I think that some normal retail that we think about will come back as well over time. I think the big challenge is really about human behavior. It's the psychology of the consumer, or how quickly are people going to want to get on trains and planes and take vacations, and how will that behavior change? How long will it take for people to kind of feel comfortable doing that? The other area that I just mentioned is really healthcare. If you look at the data, and this may be a little bit surprising to people, the hardest hit sector in the entire economy is the healthcare sector, hospitals and things like that. And that's because they had to shut down and reduce dramatically the number of patients that they were seeing to deal with, either deal with COVID or because of other restrictions. And so that's an area that I think that can, over time, as they adjust to some of these new realities, also come back and start providing services there. The areas that I think that are going to be able to continue to operate, or because technology has actually worked better than I think anyone expected, would be financial services, law professional services. So those are continuing to operate, and I expect that as restrictions get relaxed, those that come back, things like real estate, things like that. So it'll be different. We don't really know what this future new normal will look like, but I think that those things will come back over time. The biggest question mark is how the consumers can behave, and how long will people take to kind of really want to take advantage of the tourism and other things that are really vital to this region's economy. Obviously, Long Island in particular, but you think about New York City and other areas. It's really about tourists coming from around the world and enjoying all the things that we have to offer. And so that's going to be a question we're going to have to wait and see on.
Yeah. You mentioned real estate earlier. Obviously, real estate industry is a huge driver of the Long Island economy. What do you foresee the impact the current crisis having on the real estate market on Long Island, New York metro area? And how do you see real estate financing for homeowners and commercial property owners being impacted?
Well, that was really a major concern for us back in March. It does seem like a long time ago, but back in March, we saw the U.S. Treasury market and the mortgage market show signs of, kind of stress that we hadn't seen since the financial crisis back in 2008 and 2009. And, that was really our first really strong actions in terms of, providing liquidity and doing these asset purchases in the U.S. Treasury and the mortgage-backed security markets was one of our first big actions at the Fed. And that's because those markets are so critical to our economy. If you don't have the U.S. Treasury market, which funds the U.S. government, you don't have the mortgage market working well, that's just, going to be so damaging to everything. And so our actions, I think, have calmed a lot of the mortgage finance markets. That said, there's still a lot of challenges. The federal congressional action has allowed for forbearance on loans. There's been some uncertainty along the ways exactly how that would play out. I think that those issues are being resolved over time. There's also just the issue of how do you buy a house or sell a house remotely, and getting all that paperwork done and all that process done purely remotely, as I think been challenging a bit for people. From my perspective, what we've done is, we've worked hard at making sure the mortgage markets are working. We've lowered interest rates, which means the mortgage rates are going to be coming down. We expect to see the housing market, once things open up a bit, to be active again. I think one big question, again, that I can't answer is, how is this going to change people's views about where you want to live? Where are we going to work? Are we going to be working remotely more often? Is that going to be easier? That actually could be a positive to Long Island's region, so people don't have to commute as much, those who travel into the city. So I think there's going to be maybe some more structural changes that could happen to housing. But I think that the housing market shouldn't suffer long-term damage from what's been happening.
Gotcha, thanks. You mentioned labor, and let's talk about that for a minute, and then we'll move to Q&A in our last 15 minutes from comments and questions we've been getting from our participants. But clearly, look, our essential workers have been the heroes of this pandemic, no doubt about that. In the last few months have really shown us that the future of labor on Long Island, and across the country for that matter, is going to change in this post-lockdown period, as you're indicating. Social distancing at work, telecommuting for those who can do so, staggered work schedules, et cetera. What's your thoughts on the impact of these changes in how people work, on how effectively people work, and what does that mean for our workforce and our economic growth in the next couple of years?
Yeah, I think a couple of things comes immediately to mind, and I think that is that our normal assumptions, I have to challenge myself on this about how we work and where we work. I think have been called into question. We've now been working remotely over 2 months. We've been doing more work and accomplishing more in these last few months than we have in many years. So clearly, technology has transformed the ability to work remotely. And I think that's something that all the business leaders I talk to are thinking seriously about. How do we organize our office place? The other thing that I think is really important is the criticality of technology. So when you think about the digital divide, and we talk about Long Island. Long Island isn't just one region or one economy; it's multiple economies. There's rural parts. There's kind of the urban, near New York City. There's a suburban part, and really understanding that everybody, for this economy to really be prosperous, everybody's got to have access to technology, whether it's broadband or other things. But also we need to be educating people to use technology in the schools, obviously in college and high school, college, but also in terms of training and developing these skills in the workplace. I mean, I'll admit this, all of us were, you know, kind of learning as we go about using, whether it's Zoom or WebEx or Skype or any of these things, and really learning to use these collaboration tools on the fly, because we, you know, have all of us are a little bit older, have maybe tried to avoid this. Of course, the people who are in college today, the students at Stony Brook and others, I mean, this is how they live and work. So I think they got a leg up on us in terms of using technology really effectively.
I hear you. Well, we're glad that in this case it was able to allow us to, technology would allow us to have this conversation with you. So, here's to technology in the future. We're gonna move to Q&A. Those who, just a reminder, those are our participants who are on Zoom can add their questions into the Q&A. We only have about 15 minutes left, so I have a whole bunch of questions that we have been submitted. But, you know, I think, so we're gonna move now to the Q&A. You mentioned about, you know, how does Long Island thrive going forward? And I think this question that we have is a very important one, and that's this. For Long Island to thrive, it needs to embrace the economic potential and contributions of every single resident. In fact, it's been estimated that in recent years, closing that racial wealth gap on Long Island would have led to a $24 billion boost in our local economy. We've seen COVID-19 has had disparate racial and class impacts and has widened economic disparities. So as we're coming out of this, or hopefully as we move through this the situation, what can we do to level the playing field to make Long Island more economically inclusive and thus economically stronger?
Yeah, I agree with the questions premises. I completely think this is one of the big challenges, not only for the region, for our country. And you know, before this started, we were working at the New York Fed on an emphasis on inclusive growth. It's really focused throughout, you know, the New York Fed's region, urban, suburban, rural. And so I think it's really about investments. You know, as someone who comes from the business world, that's probably not a surprise that if you really want to grow your economy, your business, it's about investment. So I think that the three key things are investments in, that we already talked about in terms of technology, making everybody, you know, limit the digital divide there. I think investments in education, it's not just college education, it's pre-K, it's K through 12, it's colleges, it's lifelong education and training. Every one of us in this modern economy really needs to have, you know, reinvent ourselves every few years. And finally, I think it's really about investments in the broader infrastructure of our economy to make sure that growth opportunities are kind of shared across regions across the country, not just, you know, pockets of extraordinary, you know, economic growth like we saw in the past decade, where certain, gateway cities, where New York City being one of them, but places like Seattle and the Bay Area, San Francisco Bay Area, and others, where they, you know, we saw enormous rising incomes in other parts of the country not benefiting as much. So I think those are the three big investments we really need, is in infrastructure, education, and really making sure that everybody has the same opportunities in terms of the new digital world.
Great, thank you. We've had a bunch of questions from our participants about inflation. Obviously, compared to the national average, Long Island has a bit of an older population, which means that higher numbers of people rely on their savings to live. And of course, this is a very expensive place to live to begin with. So we're all concerned here on Long Island about how much things cost. So given the unprecedented scale of economic stimulus from the Federal Reserve, as well as through the CARES Act, what do you think the prospects are going to be going forward in terms of inflationary impact?
Well, honestly, inflation is falling, not rising. I mean, I totally understand why people are asking that. One of the things you learn when you take introductory economics is when the Fed prints, quote unquote, prints money, that can be inflationary. I would rephrase or reframe how to think about some of the actions that we've done, and including the CARES Act on the fiscal action. It's not so much stimulus to take an economy that's growing maybe 2% and try to get it to grow 3 or 4%. It's really about trying to fill a hole in terms of the CARES Act and helping families and businesses have some income so that they don't go bankrupt or go out of business, just to kind of get them through that. And then they're going to go, do their normal activities. And for us, it's a lot of what we're doing is either to make sure the market functioning improves, which I think we've been very successful at in terms of these key financial markets, making sure that credit is flowing. or making sure that credit is available on a temporary basis to whether it's state and local governments, businesses, households, again, to get them through this. So I don't really see a lot of these actions as ones that are going to overheat the economy. If anything, they're just going to try to limit the damage from the COVID experience on the economy. And what we're seeing in the data, and I expect to see it play out over the next year or two, that the declines in demand, if you will actually be larger than those in supply. So meaning that I expect inflation to run below what we've been seeing in the last year or two, and that's just something that we'll obviously be watching carefully.
Gotcha. Thanks. A few people had questions about the amount of federal debt issued to provide the economic stimulus, as you mentioned. So kind of unprecedented in what's happened in the last couple of months. And the question was, from a practical perspective, is there a limit to federal debt issuance as a response to the economic crisis? And if the crisis continues next year, what other tools does the Federal Reserve have left to use?
So I don't think, in the current situation, in the current situation, the deficits that are created by the various actions of Congress, I think are exactly what the federal government should be doing. Is, this is an extraordinary, unprecedented situation, providing income, providing bridging through this period so that we can limit the damage to the economy and the suffering of Americans. And also, again, this thing about this goal of limiting the longer term disruption and damage to the economy. We know that small businesses that go out of business or go bankrupt, it's really hard to restart those. We know that families who lose their homes, it's really hard to get your life back in order. So the more these actions can limit how many of these, whether bankruptcies or other foreclosures or things can happen, I think the stronger our economic recovery will be. So I think that this is, appropriate time to be using the ability to borrow. Is there a limit to that? I don't think we're anywhere near the limit to that. The US government is issuing a lot of debt right now. Global investors are gobbling this up. That's the technical phrase. So interest rates are very low. There's a lot of demand for US Treasuries because the American economy is still very strong fundamentally, and the dollar, of course, is still the reserve currency for the global economy. So I don't see right now any problems in terms of deficits. Obviously, in the long run, we have to make sure the fiscal policy or in federal government is on a sustainable path, and that's something that they'll deal with. Then, right now, I think the deficits aren't a problem either in terms of the ability to finance the deficits or in terms of creating other big problems.
Well, in that regard, obviously Congress is discussing now additional fiscal stimulus, and as you know, both Nassau and Suffolk counties are facing significant budget holes as a result of the crisis, both because they have to keep paying essential workers and because of the sales tax issue that we talked about before. The chairman of the Federal Reserve has indicated that if state and local governments have to cut back, our national economic recovery could be delayed. So I was wondering, what are your views on whether more fiscal support should be provided by Congress and the administration?
I stick to this rule of not telling other parts of the government what they should do, thinking that maybe they won't tell us what to do, but because we are independent of the Federal Reserve, we take that very seriously. I think the real concern that I have, instead of saying what should Congress do, the concern I have is that even after we get through this pandemic, and hopefully, we'll get through this and, start the economy, coming back, rebounding strongly in the second half of this year. That's what I'm hoping for and looking for. But, what happens then is, and we saw this after the financial crisis, is that, the state and local governments have, they have balanced budget requirements on them. And they're then having to cut back and lay off workers right when the economy is starting to pick up. And that becomes a drag on the economic expansion. So I do think one of the things that policymakers need to be watching out for is making sure that state and local governments, can continue to fund and employ people in education and in public services, police, fire, all those things are really critical for our society, our economy, as the economy comes back. Because we did see a long period of cutbacks by state and local governments after the Great Recession of 2007, 2009. And I wouldn't want to see a repeat of that.
Gotcha. A couple of quick last questions. Central banks around the world have been implementing negative interest rates over the last decade to encourage banks to lend to households and businesses. Do you foresee the U.S. Federal Reserve ever implementing such a policy? And what do you think the pros and cons are of doing so?
You know, we looked at this issue. I've been on the Federal Open Market Committee since 2011. We looked at this issue back then about negative interest rates. Currently, the interest rate that we set is just above zero. And you know, the decision, you know, the analysis and the conclusion then, we revisited that a number of times, I think still holds. We have other tools that we think are, I think, are more effective or more powerful to stimulate the economy. They include obviously keeping interest rates very low, using what we call forward guidance, communicating our future plans about interest rates, and using our balance sheet to affect financial conditions. Those were powerful tools after the Great Recession, helping the economy, getting back on track, getting unemployment down to below 4%. I think that those are the kind of tools that we have ready to use, and we've committed to use our tools as appropriate to support maximum employment and price stability. I don't think negative interest rates is something it makes sense, right, given the situation we're in, because we have these other tools that can be used. So that's my view on that.
Great. One last question about sort of the future of the Federal Reserve. Leading economic thinkers like former Treasury Secretary Hank Paulson and former Citibank CEO Vikram Pandit have recently opined that the current crisis reveals a weakness in our U.S. financial infrastructure in terms of getting relief to individuals and businesses, and we've seen that with PPP and other things. And they've urged the Federal Reserve to consider creating a digital currency and a digital wallet for all Americans. I want to get your thoughts on those ideas.
You know, it's interesting you brought that up, because that's definitely a topic that was, the topic of 2019. Again, it seems like a long time ago, but central banks around the world, through international organizations and on their own, have been looking carefully at digital currencies, central bank digital currencies, and how technology can solve or help address the problems of high costs of financial services for low-income families, deal with the underbanked and unbanked and all of that, and those kind of issues. So I think that using technology and thinking creatively about how technology can be used to address these types of issues has been a high priority before the COVID crisis. Obviously, as you mentioned, people are bringing that up again. It's something that is definitely under study and discussion. The Federal Reserve, we don't have any particular plans around that, but I think it's a topic that will continue to be discussed. And one thing I do is watch carefully what's happening in other countries. They have tended to push forward a little bit more quickly on those, and really learn kind of what the benefits are and what some of the challenges are. One of my concerns, of course, would be we want to make sure any payment system that we have serves the broadest public as possible, is safe in terms of cybersecurity and other kind of fraud or other issues. And obviously, we have to make sure that any currency is not being used for illegal purposes, such as terrorism or things like that. So there's a lot of issues that have to be thought through around this, and that's an area that people continue to analyze and discuss.
Great, important points. Thank you. Now, you've been living in New York for about 2 years now, I believe. And so my final question is just to kind of gauge how much of a New Yorker you've become. I know you're a California kid at heart, but I was wondering if you've found yourself rooting for any of our New York area sports teams. Well, perhaps we've lost President Williams, but well, we'll have to get him out to an Islanders game one of these days once they come back to Long Island. Anyway, thank you, President Williams, for taking the time to hear the voices of Long Island and to share your thoughts on our future as a region and our future as a country during this difficult and uncertain time. Certainly look forward to welcoming President Williams back in real life to Long Island before too long. And thanks to all of you, the Long Island community, for participating in today's event. Please stay safe and take good care. Thank you and goodbye.